Well, g'day there everyone. Thanks a lot for joining me on this Monday afternoon market recap. What can you say really on a day like today? It's very rare when you see all three of the US financial market indices themselves down at least 3%, if not bordering on 3.6%. We have seen another gap to the downside. I'm just actually updating the end of session bars as we speak right now. So this should be off the screen relatively soon. I'll push it down to the bottom here. But as you can see, all three of the US markets gapped and goed essentially to the downside. This is the chart of the NASDAQ. We closed down just shy of 300 points, a massive downward session, 3.7%. In fact, as at today's close, we have overshot this green rectangular box. The good news, however, if there is any to come from today's session, is that when we have a look at this in at least retrospectively as to where we have come from, you can see this is the first trading session of January 2019. This is the first major intermediate pullback that we have seen. This came in the month of May, and here we are obviously in the month of August, the first three sessions of which have been exceptionally bearish, right? And again, you can see that this is now the third consecutive, right, high low, which is essentially setting up this intermediate trend line. Now, as I show you this on the other three closely followed markets, you are going to see at least that the markets have temporarily overshot them. Okay, so we have to allow, of course, the ebbs and flows of the market noise to sort of run its course over the next couple of days just to see where these markets actually settle. I am looking for these markets to more or less slow down currently where they were. I was expecting, first of all, or at least initially, the NASDAQ to actually stop closer to 8,000. We very much so overshot that. We're down at 7,726. So you can say that by about 250, 275 points, we have overshot that psychological round number. However, again, technically speaking, this is what we do as we look at the financial markets, is that if you wanted to have a look at the NASDAQ and think of it through the lens of the intermediate time frame in conjunction with the macro time frame, off from the fan line acceleration from the macro primary bullish trend since March of 2009, this is still technically very much so setting up that next high low as I've already referenced. Okay, so do not panic, do not freak out. In fact, you should be looking at this market again, jumping on in at a discount. You should not be looking to sell, especially after today's session. This is going to end up in a mammoth short squeeze whereby those who are aggressively shorting the markets are going to slowly and painfully have to unwind those trends like they have done during the melt up to begin the year, whereby we went positive year to date, marginally into the month of April, whereby the markets themselves rallied over 20% within 3 months prior to the sell-off, again the melt up, and here we are again selling back off prior to again another melt up. All right, so I'm warning you, the worst thing that you could possibly do, in my humble opinion, my honest assessment of the markets, and really what I'm doing again and continuing to do even as of Friday last week, whereby I'm buying the market, is that again today, all right, you're getting the market at an incredible discount. Those option contracts, or at least the option contracts established really now since the beginning of June, they're pretty much underwater, at least they are breaking even. Again, I'm just leveling with you as I will do each and every time I do present you with a market update. But am I concerned? The answer to that question is no. No, I'm not. In fact, I'm relatively excited. And again, I'm just recognizing the opportunity as it stands, not only on the NASDAQ, but also on the Dow and the S&P 500. A few things to point out again, a gap. However, we're back down in that intermediate bullish trend line. As you can see, when you look at the oscillators, the RSI exceptionally oversold. Last time we were here, it coincided with, of course, the sell-off back into the intermediate time frame. So again, a little bit of deja vu there. You can see the stochastics rolling over and the MACD accelerating still. So we haven't actually seen the deceleration of the histogram line, okay, or the histogram bar chart, whereby we start to decelerate back towards the neutral line. But I do expect that to actually show up over the coming sessions. And if we continue with this, the CCI has fallen off a cliff, almost down into negative territory, and the ADX is turning up. Again, pay attention to the trend line. That is the most important piece of analysis, and also the swing low back in the period of very early, or the first trading session of June. As long as the markets stay up and very close to around that swing low, technically we are still in or within the textbook definition of an uptrend, even on multiple fractals, okay, of the bullish continuation of this trend higher. If you go back, and I have studied this in the past as well, what I originally thought, and I'm just going to share this with you, is that when you take a look at this resistance area, it made a lot of sense that we were going to come on back down, retest that critical past resistance as new support prior to at least the continuation of the rally higher. What we have seen during these periods, okay, and this is a really good actual example of this, is that in the past when we've broken up into relative highs, I might need to actually move this over, all right, just to show you this, is that during the bullish continuation in the past, especially during the period of 15, 16, okay, we've come up on multiple occasions, right, whereby we have essentially printed that of a new all-time high at that particular juncture. However, what we have done as well is actually overshot not only the past sort of support areas on the intermediate time frame, but actually, again, pushed them down a little bit lower. I'm not calling for this, but again, when you think about the dynamic and the simple fact that, again, we're still at least a year, if not 2 years away from at least a market peak, it's just giving you another opportunity to leg into this. Even if it takes a number of months or potentially even, say for instance, 6 months, I still think that we are going to crack above these all-time highs relatively quickly, and we are going to see that of a continuation very quickly. If you pay attention again to 2015 through to at least the back end of 2016, whereby we started to at least test it as support and we started to overshoot it back down to 5,000, whereby about a year and a half, the actual peak up here was 5,200. This is on the NASDAQ. It makes a lot of sense as well that instead of actually shooting off or at least selling off like this at the moment, we could actually be very close to that V reversal whereby we see these markets just take off back to the upside. Now, this is on the NASDAQ. It may show up a little bit more sort of nicely on the S&P 500 or the Dow Jones Industrial Average, but I just wanted to point that out to you. So although, again, the sentiment at the moment, the prevailing sentiment is relatively bearish, and again, it is, look, it should be. You get these periods whereby the markets, all that naturally, at least all that oftenly, don't actually sell off over 3% in a day. So again, it is a little bit of a rare exception at this particular time. But when it does, again, it's offering you an opportunity because we are still holding up above the intermediate trend lines and also obviously the macro trend lines as well. Here's the chart of the Dow Jones Industrial Average, down 767 points. I think intra-session we were down over 1,000 points, and it did turn out to be intra-session the third biggest point sell-off in the history of the Dow Jones Industrial Average. That's not taking into consideration the closing price as at Monday. It is taking into consideration the lowest part of this wick on my screen. Again, all right, this is where it starts to break down. We've got the intermediate trend line. We are still establishing a series of higher lows. You can see these green arrows intersecting where these red little swing low lines are. And as it stands, we've sort of sliced through that of the intermediate trend line. But again, we're just coming back down to another area of support. This is my original sort of support area, where again, we were speaking about how the market was trading at a discount. Now the market is trading at sort of like an extra discount, so to speak. We haven't done any technical damage really at this particular time, even as at the close on Monday. I know it's scary, but again, I would encourage you to obey really the title of the previous video, whereby we said more or less disconnect your emotions from the price directional movement of the markets. It's very important that you do so and just be a little bit irrational. I wouldn't say irrational, but be in the sort of the contrarian side of the trade, in the minority right now, because the majority, unfortunately, they're probably just reading the headlines right now, and it's forcing them at least it's encouraging them to act with conviction when it comes to actually selling out of, or at least closing open and existing trades, probably right at the worst possible time. So again, as the majority of people are selling and contributing to these dark candlesticks, and if we were to understand that we're not looking at the macro sort of top of the reversal for quite some time, now is the time again to get in and to get this market at a discount. Lock in that real estate, so to speak, prior to, again, the continuation of this market moving higher. We're going to monitor it when in fact that does occur. But again, 767 points, quite rare in the industrial average. I think this is the biggest one-day point sale when it comes to these markets collectively, right, for 2019. So a big downward session, all right, and it's somewhat welcomed, all right, because it's not going to give you all that much more opportunities once we do crack above these all-time highs. Again, you can sit here and say, I think I'm getting a lot of comments, or at least it's not what I think, but I am getting a lot of comments about my sort of positivity and just drawing arrows constantly to all-time highs. It hasn't failed us, yes, and look, it is going to come again, all right? We're going to see the sentiment shift, things settle, all right, and the market's going to slowly hit the bid and move higher. But have a look at this. RSI is back into oversold territory. Same on the MACD. We're still seeing the histogram, right? The bar chart accelerate away from the neutral point. We still haven't seen the deceleration yet. The stochastics is pushing into negative territory. We're seeing the ADX, pardon me if I can bring it up, begin to accelerate. You can see the CCI falling off a cliff, very similar to that of the NASDAQ. However, again, not concerned. When you bring up the simples, we're back down to the 200 simple moving average. If I show you this on the NASDAQ as well, we've got a little bit further to go if we are to intersect that. When I bring up the S&P 500, we still have a little bit further, again, much like the NASDAQ, to actually hit that 200 simple moving average. Now, again, when it comes to the intermediate trend line that I've been referencing over and over again, you can see that the S&P is probably the hardest hit of the three markets when it comes to, all right, the extension of this trend line. All right, I've got the NASDAQ still technically above it, Dow Jones marginally below it. Now I've got the S&P a little bit more below the intermediate trend line. We have to allow, of course, a little bit of wiggle room. As it stands, though, we have a gap between Friday and Monday. A little bit of a wick developing as at the close on Monday afternoon. We're below the exponentials. Oscillating indicators technically relatively speaking anyway, bearish for the time being. And again, it's supported by the ADX and the CCI. What appears to have happened is that we have seen a rejection up and around this area, but at the same time, we're going through the ebbs and flows of a market very early on during that of a trend breakout, even though we have overshot and we're back below that of resistance now, or at least past resistance turned support. Now it's going to act as short-term resistance. The first resistance, though, however, is really going to be the top of this gap. Okay, but the good news is that on the intermediate time frame, we're still looking quite good, even though it has been a relatively negative or bearish past 4 trading sessions. Now, when it comes to the top 12 individual trade lists, obviously we're going to have seen a little bit of collateral damage. The good news, again, is that the majority of these stocks we are simply not in. So as it stands, I'm going to bring down some of these entries. Apple's coming down to 202.87. We're not going to be too aggressive, but at the same time, okay, we've got some pretty decent entry points as to where we would expect, all right, or at least where we could get in at a better price on these individual trades. 1837 for Amazon, that has been shifted down. Again, going into the negative divergence that we've been speaking about on a lot of these stocks after we've differentiated them into 2 categories. We've got leaders and also laggers, okay? Boeing Airlines, pardon me, for instance, is more so of a lag. I'm going to bring this trade down to 344.99. All right, all of these trades, by the way, we are going to, at least not all of them, Baidu is certainly something that we're not going to do. Caterpillar I am going to bring down because essentially we were in no man's land as of the close on Friday, but now, right, we're turning this into a dashed solid default line. Oh, let me just go default here, right, because we're going to take advantage of the bounce, the impending bounce when the markets do stabilize. So again, that's another trade we've just shifted, all right. COP for the time being. Let me just have a quick look at this. I mean, we have technically broken this trend line. We're going to have to see a reversal from this very soon in order to actually go long. So for the time being, I'm going to leave COP exactly how it is. Disney, as I put through in the Pro website, it is set to report earnings, so there's no trade there on Disney. Google, you can see it's come down. It's actually closed the window. So when it comes to the NASDAQ and the NASDAQ getting clobbered, probably the most of the 3 markets, this is really fantastic to see because now we have definitively closed that window and we can begin to bring down some of these bullish trades. It was looking like a little bit of an exception when we were up here at, say, 1,270 to actually think about this coming down at 1,150 to close the window, but it has. That's fantastic, and that should make you happy because we've just jumped through some of the hurdles or the hoops in order for the market, or at least that particular stock, to move higher. Now, IBM triggered. You can see up here, it's back down at 140 at the moment. A little bit of a whipsaw here. I'm still very confident on this trade, but it is going through the back test of what appears to be that of the back line now, or the back bearish trend line. If I could just bring this down into perspective here, of this retest at about 140.76. So again, although we don't have a definitive reversal setting up yet, we're still looking at it to actually base on the equity markets, and that's going to trickle through into IBM as well. So again, IBM's been hit a little bit. I'm not going to bring down any additional re-entries on that stock. However, all right, if you give it enough time and allow the markets to stabilize, you're going to see that drift on up higher. And the second last stock this week is Microsoft again. Into the green rectangular box, very similar to the markets. You see sort of, although it's not identical in terms of the actual months, you can see how you're getting these intermediate pullbacks back into the primary bullish trend line, or at least the intermediate trend line for Microsoft. Very similar to the markets. 132.21, we were speaking about this a number of weeks ago. This is actually really good now. So you can bring down an entry down to 135.44 and pre-run, or at least front run, right, the breakout to new all-time highs. And the final stock this week, or not this week, but for today's session, as at the close of Monday, is Netflix. Now, Netflix is pulling back down. It's made a relative low, so we didn't actually set up that of a higher low like we did on Google. That's largely, of course, been aided by the state of the weak markets at the moment, but we're looking for Netflix to actually hold, okay, to stop and to reverse, right, around this pivot here, and to drive on back up to actually close this window at 361.26. So it hasn't happened yet. Waiting for it now. We've got a little bit, I mean, it looks as though we're on the precipice of actually breaking to the downside. We do have an open window here, all right, but as it stands, personally, I'm still looking at this and waiting for that W for winner to show up. But it's really dependent, again, as I've already sort of hopefully harped on enough at this particular point, as to where the dust settles on these markets, okay? Again, I'm welcoming this with open arms, and looking to, like I already have today, or done today, and also on Friday most recently, continue to add to positions. I know it's hard to do, right? It seems a little bit counterintuitive at this particular time, but the market, it's not going to send you an invite to jump on in and to answer. You're going to have to step up and do it yourself and just lock in the discount prior to that move higher, okay? Because it's going to come again, And don't be surprised when it does. I know it's very easy to be bearish in this particular scenario. It's the easy option to take, the easiest sort of path when it comes to the sentiments of trading, to sort of throw your hands up in the air and say how terrible things are. But instead of doing that, I encourage you to do what the minority of people are doing, and that's actually taking a vested interest or taking a vested position, all right, for this market to continue on its merry ways higher. Nothing has really changed all that much, except, of course, the escalation in trade data. Well, not so much trade data, but in the trade tension with China retaliating. And I think we have seen a little bit of an overreaction. Obviously, a lot of people are talking about currency wars now that the Chinese have allowed their currency again to further depreciate. I think we've blown through the 7 handle now, which is the first time that this has happened. And again, Trump is rather furious about that. So we'll see what happens if there is potentially another escalation, holistically speaking, from that of a trade war into a full-blown currency war. I hope not. But we'll see. We just need sort of tensions to settle. Hopefully we'll come to some form of a formal agreement on trade soon, and potentially that may include currency too. We'll see. Time will tell. But as it stands, markets are on edge, rightly so. However, again, a little bit of an overreaction in my personal opinion based on just where we are in this current cycle, right? Or at least the market itself is offering you a little piece of gold right here. Okay, so that'll do us for Monday afternoon. Cheer up, everyone. And I'll see you later in the week for another market update. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.